2007 can be downloaded from SEC website. And when you download from SEC website, when you read, with regard to framework, this is what the guideline says with regard to the framework. It recommended, hold on, I'm trying to, okay, now this is the position of the guideline. The guideline says, it says management must base its evaluation on the effectiveness of the company's internal control over financial reporting on a suitable recognized control framework that is established by a body or group that has due process procedures, including the broad distribution of the framework for public comment. The COSO framework satisfies our criteria and may be used as an evaluation framework for purposes of management's annual internal control evaluation requirements. I was part of the team that put up this framework, and it was quite clear that we do not want to be too prescriptive. We do not want to limit entities to just one framework. However, just like the American PCOB, we only recommended that, well, we have one that every organization could use if you don't have any other framework. And the reality is that most entities globally uses this COSO internal control framework. And with regards to the framework, what does it actually mean to organization? Why do we need to adopt a framework around internal control over financial reporting? Just like we have for annual financial statements, FRC legislated IFRS, and it's just IFRS and no other thing but IFRS. For us also, for internal control, we are saying you must have a framework, though we are not saying it must be COSO, but you could use COSO or any other framework that is very close to COSO framework. So for management, it means to apply internal control to a type of entity, regardless of industry or the legal framework or the level of the entities and the operating framework or function. What SEC is saying there is that, we are recommending a framework because it can fit into any structure. It can fit into any business unit or operational unit. That's why if you look at the COSO Cube quite drill down to all these units. It is principle-based and it is flexible. It is designed to allow for judgment. It's not rule-based. That is one of the good things about the framework that is being recommended. And if you look around the framework, it's also allow for components and principles. And by the time we look at these components and principles, the guidelines tend to state that, well, the components must be present and it also have to be functioning. All these concepts you get to know, the concept of presence and functioning, you get to know around the framework. The framework also is risk-based. It's meant to respond to risk. Any framework that you have to use must have these qualities and characteristics. And with regards to the framework, beyond financial reporting, it can also address compliance with regard to laws and regulation, and also it can also address other operations. Okay, the next. So if you look at the framework also, it's also talked about the benefit to external stakeholders, that external stakeholder, it gives them a broader confidence regarding the financial statement, and also the board of directors. It helps in building confidence in them. And also with regards to other stakeholders, what the framework helps us to do is that as a business generally, when we apply a framework, it helps in a better understanding of what we do, our business, and also it helps us, it guards our ability to make informed judgment around the internal control that we have put in place in the organization. Now, these are the organizations that came together to put the COSO framework together. You get to have to read them up in a more deeper level when you get the framework yourself. Then the COSO organizations that came together, they issue all this documentation. Please try as much as possible to see how you can go through these documents. We will try as much as possible to see how we can share some of these documents with you. Hold on, please. Sorry, I was told initially that my slide was not showing well. I think it's okay now. Okay. Yes. Okay. My land is still not showing well. Okay, sorry, we are back. Actually, I was using two screens. I think that was what caused the intervention. Okay. So I will try and be fast because I've taken quite some time. Okay, so the framework defines internal control as a process affected by entities, board of directors, management, and other personnel, designed to provide reasonable assurance regarding the achievement of objectives in these three categories, that is effectiveness and efficiency of operation, reliability of financial reporting, and compliance. And this framework is being built on 5 components, as you can see. And that's why when implementation is being done, a lot of departments are involved, they are engaged, people are interviewed, people are spoken to, and we get their views around their feelings around internal control. And for the 5 components, they are also sitting on 17 principles. And within the 5 components, you can see control environment has 5 principles, risk assessment 4, control activities 3, information and communication 3, then we have monitoring 2. And the rule is that all these components must be present. If they are not present, there are issues. If you say a component is not present, you have to explain why that component is not present. But the general accepted rule is that the 5 components must be present, then you must have your 17 principles. And within the period that we are testing it for, whether it is present and functioning, we test these 5 components for presence and function, and also we test the 17 principles at the same time. Now, under the 17 principles, we also have what we call points of focus. Points of focus are about 86 points of focus. I will be flashing through them before the end of this presentation, not going too deep into them, but I just want to let you know that within this framework are 5 components, 17 principles, then about 86 points of focus. Now, within the documentation done by the COSO organization that I showed you earlier, it was stated there that the 86 point of focus does not necessarily need to be present in your own organization. However, the principles must be present. The components also have to be present. So that is the requirement I've just explained, to be present and also functioning, and it must function in an integrated manner. So this is further explaining what I've just said, the objectives of the COSO framework itself around efficiency of operations, around reliability of financial reporting, and around compliance. With regard to the objective of the COSO framework and internal control is still tying around those 3 areas. Now, with regard to the framework, the control environment has these 5 principles that I've mentioned, and these principles are further divided into these point of focus. You can see what I told you about the point of focus. I said there are 86. So when you are testing within your organization, please locate the point of focus. The point of focus is not exhaustive. It's just meant to guide you. This is just one principle, and you can see the point of focus under the principle that states that the organization demonstrates a commitment to integrity and ethical values. And the point of focus should be that now set the tone at the top, management establishes standards of conduct, management evaluates adherence to standards of conduct, and also address deviations in a timely manner. So you can see further principle 2, and the point of focus. principle 3, point of focus. I'm showing you this so that in your own organization, as you state the principle, you also list out the point of focus that you are going to be addressing. For risk assessment, these are the principles under risk assessment. There are 4, like I've told you, and you can also see the point of focus under each of the principles that comes under risk assessment. For control activities, these are the 3 principles under control activities. And for the principles, we also have our points of focus, which we have to address. So your working papers or your documentation that you are going to show to your auditors must prove that you have considered all these areas, and that the ones that relate to point of focus that is not relevant, you eliminated. The ones that you think is relevant that is not listed by COSO, you bring them in. This is information and communication, the principles and the relevant point of focus. And lastly, we have monitoring. Monitoring only has 2 principles, and the 2 principles under monitoring are this, and they also have their own point of focus that we need to address. So this, in a nutshell, is what the framework look like. So like I said, the COSO organization, they have given us adequate documentation, adequate publication that we have to use, and all these publications that they have released, we will send to you as our clients, review them, apply them to to check or as a benchmark on your own documentation and see if you have met them. I know to some of you, you've engaged external consultants to support you. Those external consultants, whatever they have done, still use this COSO documentation to check their adequacy. So thank you. We'll meet again at the question and answer session. And sorry for the glitch in the technology at the initial presentation. So back to Sheung.
Thank you very much. Thank you very much, Oduwari. So without taking too much more time and moving straight into the next agenda item, I'm going to invite Dr. Agama to talk to us for the next about 25 minutes on demystifying the guidance on implementation of sections 60 to 63 of the Investment and Securities Act 2007. So I'm just going to read through his profile quite quickly. So Dr. Agama is a chartered management accountant, economist, investment analyst, a risk manager, and a chartered stockbroker. He is currently managing director at the Nigerian Capital Markets Institute, a subsidiary of the Securities and Exchange Commission. He was previously the head of registration, exchanges, and market infrastructure and innovation department, and the special assistant to the Executive Commissioner Operations, as well as the head public offerings at the Securities and Exchange Commission. Dr. Agama was a secondee to the US SEC in 2018. He is a ranking member of the Rules Committee, was a member of the SEC Committee on the Adoption of IFRS in Nigeria, and the Arrowhead for the introduction of derivatives trading in the Nigerian capital market. Prior to joining the SEC, he was at various times with the University of Benin and Office of Accountant General of the Federation. Dr. Agama is a fellow of the IFC Milken Institute's Capital Markets Program. So I'd like to introduce Dr. Agama now to talk to us through his topic. Sorry, you're muted, so we can't hear you.
Yeah, so thank you so very much, Sheung, for that introduction. It's indeed a pleasure to be here this morning as part of our collaborative efforts between the SEC, the Securities and Exchange Commission, and Deloitte in the implementation of the Section 60 to 63 of the ISA, the Investment and Securities Act. And it is very interesting that we finally come to the end of the road, so to speak, If you imagine that the ISA came to be in 2007, and the law then the law actually came to existence in 2007, then but we are just about implementing that law. It tells you so much as to exactly where we are and how far we've come with this matter. So for us at the SEC, any opportunity such as this is taken very, very seriously. And that is exactly what I have come to attend to probably blow the horn on rather than just sitting at the back. So once again, thank you, Deloitte, for this very important opportunity, and we do not take it for granted, and we'll continue to do that. So before I start off my presentation, just to let you know that Deloitte is actually ruling the ball ahead for us, because in September, between September 11th and 13th, we're going to be holding a workshop still on ICFR in order for people to get acquainted and know their responsibilities from the managing director, the board, the audit committee, and of course, the internal auditor, the CFO, the compliance officer, the company secretary. Everybody that's involved in these needs to be educated. And so even though we are starting rather very, very late, we think that it is still important to do it. It's better late than never. We actually had the first workshop in November 2022, but this is the second workshop, penultimate to the actualization of the Deloitte section 60 to 63 of the ISA. I can say that the introductory remark by Dr. Oduari, my brother and friend, it's very clear as to exactly what we are talking about. And but sometimes it baffles me when people see it as something that is very difficult or something that is abstract. And one wonders, what is abstract in setting out controls? I mean, what is abstract in making sure that we are careful? What is abstract in making sure that we are transparent? What is abstract in making sure that everything is laid bare for everybody to see? So when we look at it as being abstract, it is because we have probably a concussion in our thought process as to exactly what we ought to do or what we want to allow people to see. The essence of accounting itself is to make it clear, make it bare, make it open. Tend to do.
I think we've lost Dr. Agam. I don't know if I'm the only one. I can't.
I can't hear him. I think it's frozen.
Yes.
Yeah, must be connectivity. So let's hope.
I think it's not.
Okay, I think he's coming back in or reconnecting now. Okay, we'll just try to reach out to him now to let him know.
Hello?
Okay, welcome back.
Yes, sorry.
Yes, no, that's fair enough. Yeah, we can hear you and see you now. So okay. I think you may continue. Thanks.
you can proceed.
He needs to share his slides again. He needs to reshare his slide as well.
I can't see him or hear him again. Let's introduce him to that problem. Yeah. Okay, I think Dr. Agama is having some difficulty with his network. So what we're going to do is move on to the next speakers while he tries to resolve that. And whenever he does, we'll be able to go back to him. So the next, our next speakers are actually from Nigerian breweries. We felt it was important to, invite people who have been through this journey in the past and who have gone through this journey. So we have two members from Nigerian breweries, Femi Agbeni and Dayo Adeni, who will be joining us. Just to confirm that you are online and available now.
Yes, we are available.
Okay, thank you very much. So I'm going to start with presenting Femi Agbeni. I'm just going to read his profile. He's a reporting and accounting manager in Nigerian breweries with extensive experience in financial reporting, financial risk management, strategic reporting, business planning and analysis, business and financial control, and has a solid track record of leading and coaching teams, driving results to positively impact the top and bottom line, and is passionate about developing talent. His industry experience also includes the process and control improvements. We also have Dayo Adeni, who's going to be joining. He's an experienced finance professional with over 16 years experience with Heineken, handling roles in Nigeria and the Netherlands, such as Brewery Business Controller, AME Strategy Project in Amsterdam, Business Controller Marketing, Business Controller Distribution, and Business Units Controller. So we thank you both for joining us today. And moving on to your session, I think I'm going to hand over to Femi now, who will take over.
Okay. Thank you, Sharon.
Yeah, Femi, there appears to be an echo. I don't know if maybe you
We're
have.
We're trying to correct that. Maybe you just leave it. So, in the room, our systems are interfering. Apologies. Is it better now?
I think it's better now.
Well,
You also share your slide.
hello, Sharon.
Yes, I'm here.
I think
can you hear us now?
I'm back. I wish I could take it because I have other engagement and I've
Okay,
started internet stuff. So please.
Okay, no, I think that's fair enough.
Yes.
Apologies, Femi and Dayo. I think we can let Dr. Agama go, and then after that, you can come on. So yes, Dr. Agama, I think you can share your slides so that we can move into your session.
I'm so sorry. It's
No,
technology risk. Yeah.
It's understood, yes.
Trying to get my slides back. Okay, so let me continue. And of course, what I tried to do earlier on was basically to speak to the essence of the section 60 to 63 and where it started from. basically giving a rundown of exactly the wordings of that section will clearly provide to us the essence of what we are all talking about, which is control. So in compliance with the provisions of Section 60 of the Investment and Securities Act 2007, a public company whose securities are required to be registered under the Act shall file with the Commission on a periodic or annual basis its audited financial statements and such other returns as will be prescribed by the Commission from time to time. This is a requirement that we all know. So when we speak to regulation of securities or regulation of companies from the perspective of the SEC, we are speaking to public companies. And by public companies, they are companies whose shares are transferable. Because for limited liability companies, their shares are not transferable. So the major crux of a public company is the transferability of those shares and the ability to list those shares whenever and when possible. So those companies are the ones under the jurisdiction of the SEC as we speak today. And that is what we speak to when we talk about, public companies. So, and we're saying that for these companies, you are expected to file your returns, your audited accounts, and all other returns that is required of you as compliance to the regulations, the ISA, and the rules and regulations of the SEC. What are we saying that should happen? We are saying that the Chief Executive Officer and the Chief Financial Officer and every other responsible person, as it were, must comply. And in performing similar functions in the public company, filing the periodic and annual returns under this section must certify in each annual or periodic report that is filed. And the signing officer has reviewed the report. All that we are saying and all that Section 60 to 63 is saying is take responsibility. That is what it is saying. It's saying that take responsibility. And taking responsibility means that you know exactly what you are signing off. You know exactly what is happening. You know exactly what needs to be known. There is no dark corner within your financial statement or the operations of your company, because it is only then that you can be held responsible. Because if you do not know and you are held responsible, of course, ignorance of the law is no excuse, you go to jail. But what we are saying with Section 60 to 63 is that you must be intentional about your knowledge of what is happening in the company where you superintend over, where you are a board member, where you are an audit committee member. It is not business as usual, where your business is just to attend meetings and vote and move away without knowing exactly how did those figures come about. What is the content of that document? So based on the knowledge of the officer, the report does not contain any untrue statement or material fact, omit or to state a material fact as the case is. All we are speaking here is your knowledge. And reading through down to all other part of it, based on the knowledge of such officers, that the financial statements and other financial information, including the report, fairly represent all material aspects, the financial condition and results of operations of the company as of and for the period presented in the report. If you are not conversant with what is happening, if you do not ask questions, if you are not attentive, if you are not detailed, certainly you will not know what is happening. And all that you do is probably sign a death warrant. What is the essence? What is the premise for an investor to put in money in a company that the people who are managing the company do not actually know what is happening in the company? So that is the reason why this is very, very important. And we all remember the Welcome and the Enron matters and how they devastated global economy. So your small space is important to the bigger space. So what we're saying here is, for that to happen, we probably need a law. And that is why this law is, because that is the premise and the basis of the Service Office Act. Here in the SEC, here in Nigeria, the SEC thought it necessary because we are a part of the global community. We're a member of IOSCO, and we're a part of the global community. And the companies that are here also represent companies globally. Hence, it was important to follow that trend. It was important to be part of that global, village, wherein everybody is, sure That what happens, elsewhere also happens this way. And that is actually the premise of the section 60 to 63. What are our expectations? Our expectations are clear. They are not so rigorous. However, people think of them as being something that you cannot really meet. With cooperation, we can all meet whatever requirements that the ISA has actually put out for us, and of course the regulations pursuant to the ISA. Because beyond the ISA's 3 sections, there is a need for some details that the companies and the officers responsible for this certification must understand. So certification in the annual report or periodic report requires that the chief executive officers and the chief financial officers or persons performing similar functions in public companies filing periodic returns or annual returns will be required to sign a personalized certification saying that I, Emomotimi Agama, certifies that I actually know exactly what is happening in this company. I actually know that this report or this financial were adequately prepared with all of the information and all of the guesses that are required to prepare this information. It is taking responsibility. And for you to be able to take that responsibility, you must be sure, because you are not always there, that the people that are going to be doing that on your behalf are responsible persons, they are qualified, and they have integrity. So it's not in your place to go and bring your village chief to become part of your chief financial officer because he is related to you, without the person having what it takes to be able to prepare an account. So, and all that he is trying to say in the certification, which I read earlier, is that he's saying that the report does not contain any untrue statement, that the financial statements and other financial information in the report fairly represents in all material respect the state of that account, that they are responsible for establishing and maintaining internal control, and have presented the report in their conclusions, with the intentions clearly known to be to provide an effective, right, based on that it is about effectiveness of their internal control based on their evaluation. Now, they are also disclosed in the report to the auditors of the company and the audit committee that any fraud that involves management or employee and all deficiencies in design and operating, all we are speaking to in essence, from the SEC's perspective, and what we require is full disclosure. Securities regulation, actually, especially in this terms, is hanging on what we call full disclosure. There was a time when it was merit. Merit regulation will require that you do an analysis, and upon that analysis, you establish the genuineness of a particular statement or a particular presentation. But in terms of full disclosure, in terms of the disclosure regime, it's a different kettle of fish. For disclosure, it's saying that you have a responsibility to tell me, without me burrowing into what you have, that indeed you have taken responsibility and you have been able to set out the necessary controls that I can rely on based on your signature. That is what disclosure is talking about. So the disclosure regime requires you to clear in your heart or your mind that indeed you are ready to do this. And because you are ready to do this, I, as the regulator, the investor, the stakeholder, the taxman, we are all confident of your ability. We are all confident of your responsibility and your integrity to do what you ought to do. Coming down from there, we have the duties of directors on internal control. What does the director need to do? What are directors expected to do? Prior to these times, we found out that directors only go for meetings to take what? To get their sitting allowances. Directors are not versed with what is happening in the company. Directors do not bother about what they need to know about the company. All that they're after is go take your tea, get your envelope, and walk away. We are saying no. We are saying no because whatever allowance you are given is premised on the investor's money that was put into that company. So you must take responsibility. You must do some work. So the directors of a public company shall report on material weakness in internal control over financial reporting. So you cannot just go scot-free. Whatever you are eating, you must pay for it. That is the essence. You must put time to studying the documents that are presented to you in a board meeting. So the management of a company is precluded from determining that a company's internal control over financial reporting is effective if it identifies one or more material weakness in the company's internal control over financial reporting. So material weakness in ICFR exists if there is a defect within the company's overall internal control system such that it is at least reasonably possible that a material misstatement in the company's financial statement will not be prevented or corrected. This is crucial and important, and not unless the directors take their time to actually evaluate, review these things, they certainly will not be able to find them out. Neither will they be able to report them. So maintaining a confidence of the impeccability in an account is dependent on the level of knowledge that the directors and the management actually have on that account. And not only on the account, on the trust in terms of integrity that these directors and management have on the process that they have instituted. With this, we are saying that the directors must set a tone from the top and not just sit back, lay back, believing that, well, we have employed people and so they must do the work. Whatever they bring to us, we are okay with it. No. You cannot determine the evil construct in a man's face. So you certainly must dig deeper, even if the person is related to you. So management's annual assessment of and report on the company's internal control over financial reporting is important. So the board of directors of a public company shall report on the effectiveness of the system and, of course, report on the statements. The report does not all speaking to the issues of transparency in order for us to save time, all speaking to internal control effectiveness, all speaking to the systems of control that have been adequately provided, all speaking to the checks and balances that is required by anybody who is taking responsibility to oversee. So taking responsibility is beautiful, you know, being in the clear lights, you know, for the press to say that you are a board member, you are a director is important. Putting that in your CV is also important, but you must do something to add to that. You must do something to earn it. And that thing that you are doing to earn it is the fact that you are being vigilant. You are being vigilant, and with that, what will happen? The company will prosper. And once the company prospers, wealth will be distributed to the stakeholder. More tax will be paid to government, and of course, development will come. So what is the choice of internal control framework? Dr. Duare has spoken about it, but just to mention, it is, you know, the global choice that we have. So the first consideration of a public company should be the choice of an appropriate internal control framework for companies that have not implemented an appropriate control framework prior to this time. A lot of times, people postpone the evil day. They postpone the evil day because of cost. And as auditors, you are aware. I used to be an auditor, so I know what it is. Sometimes you make these recommendations and they tell you we do not have money. They give you reasons why they cannot implement it, just in a bid to probably control costs, as it were. But the effect of such action is much more than the cost that is being controlled. So you must establish a proper and effective internal control in order for that to happen. And the next is the implementation of the preferred framework that has been chosen. And the last is the evaluation of the effectiveness of that. The companies are to ensure that they choose standard control frameworks that are publicly available, that will enhance the quality of the internal control report and will promote the comparability or compatibility of the internal control reports of different companies. Some of the suggested frameworks, which is not exhaustive, are the COSO, the Committee of Sponsoring Organizations of Trade Commission, the guidance on assessing control published by the Canadian Institute of Chartered Accountants, COCO, and the report published by the Institute of Chartered Accountants of England and Wales for internal control. These are not exhaustive, but more acceptable and global, framework that are recommended to be adopted. Duty of the external auditor is to report on internal controls of public companies. The external auditor is the external eye, is the eagle, is the man in the dark that has the torchlight. And its position of the external auditor is the helicopter, who sees everything that you probably do not see. Right? So it is the responsibility that has been given to the external auditor, who judges the judge. That is who the external auditor is. He judges the judge. And because he judges the judge and being chartered accountants, they are sworn to an oath of integrity. And that oath must be carried out. And the process of doing that, and that is why they have that responsibility. Permit me to use the Bible. They say the teacher of the Bible will have more problems, with God than the student. Because as a teacher, you are supposed to know better, so to speak. So the same thing, the external auditor is expected to know better. And the idea is that he should provide that guidance, that support, and that understanding to the people that are going to implement it. So the external auditor of a public company shall issue a statement as to the existence, adequacy, and effectiveness or otherwise of the internal control system of the public company. The report shall be close to the corresponding attestation report, clear, so that it will not be lost in the garbage. So immediately you see the attestation report, the opinion page, the next one is this one. So it's clear that he's following the trade issued by the company's external auditor as a result of the normal audit, or in a portion of the document immediately preceding the company's financial statement. That will tell you how important it is. Of course, the accounting firm that is required to attest to and report on management's assessment of the effectiveness of the company's internal control over financial reporting should require that the company develop and maintain evidential matter to support management's assessment. You cannot overemphasize that. Sufficient evidential matter for emphasis is required, because without evidence, what are you auditing? Without evidence, what are you attesting to? What is in your working paper file? All of these are crucial and important, that there is a trace as to the activity of this company per the audit work done by the external auditor. So this is very important. And once the company knows that this is what will be required, then what is important is that the internal control system must be adequate. As an accountant, your books of original entry are very crucial in your preparation of your statement. What is your source document? What are the evidence to show before that account is prepared? Was it in the air? Of course, there are instances where you have incomplete records, but those incomplete records must be properly prepared. In those, you must complete them before you can prepare a statement. And that's why it's called an incomplete record. So the same thing applies to you here as an international auditor. So the audit of a company's financial statement and the audit of that company's ICFR should be, as much as possible, be performed by the same auditor, because it has a history. And the two audits should be integrated with integrated audits. The test that the auditor performs may serve two purposes. Should design his or her testing of controls to obtain sufficient evidence to support the auditor's statement. So should design his or her testing of controls to obtain sufficient evidence to support the auditor's opinion on internal control over financial reporting as of year end, and to obtain sufficient evidence to support the auditor's control risk assessment for purposes of the audit of financial statement. Integration should result in a higher quality financial statement audit, and also provide the opportunity for the auditor to be efficient with time. The ICFR audit report provides the public with a barometer against which to evaluate the reliability of a company's disclosed financial information. Oftentimes, the public relies on the external auditor because the public sees the external auditor as the unbiased independent arbiter. That is the trust that the public places on the external auditor. And that is why it's crucial that the auditor must be fair to themselves in advising the companies and letting them know exactly what is wrong and what needs to be done to deal with what is wrong. The auditor is not a bloodhound, but only a watchdog. If you remember the Cotton Mills case, that is what it is. He is. And being a watchdog, he is expected to provide enough assistance to the companies as this is done. So for the SEC and for the capital market or the general public, the essence here is clearly that things must be done right. Things must be done right towards what? Promoting transparency, towards promoting integrity, towards promoting confidence. Because accounts that do not portray what they should portray diminishes the confidence of investors. And once investors begin to have that doubt in their mind and suspicion as to nature, the status, and the way an account is prepared, then we would definitely will have lost all. So what have we done? After that, after the guidelines, there is a roadmap for implementation. And it's an official roadmap, which, however, it says that companies are expected to assess the level of financial accounting controls put in place, engage external independent expert to conduct an assessment of the existence and adequacy of the existing internal controls, identify appropriate internal control framework to be implemented where none exists, put in place structures to support the framework, train board members and key staff responsible for internal controls and financial reporting, conduct a periodic assessment of the effectiveness of internal control over financial reporting, and thus prepare the report. Beautifully, I was here when the poll was taken, and almost everybody says they are ready. So I am happy, and indeed, we are going to report that almost everybody is saying that they are ready. Of course, they are in different stages of readiness. But suffice it to say that there is no more time. So if the poll was completed just for completion's sake, man, it is time to go back to your drawing board and do what you need to do like yesterday. Implementation is December 2023. There is no going back, there is no extension. As a regulator, I am really, really sad that we are implementing this in 2023 for a law that was set out in 2007. It means we have gone asleep for too long. But it's better late than never. So clearly, for us at the SEC, it is going to be fire for fire. Everybody must fall in line. Why? Because we have a responsibility to put our economy back in shape. And part of that responsibility is on these companies, is on our reporting, to create an awareness and interest in Nigerian companies, to bring foreign portfolio investors, FDIs, require that our accounts are comparable anywhere, any day. So it is important. So that is very, very important. So for the activities, the companies need to perform a gap assessment and initial remediation, a review assessment of milestones on activity, define materiality. All of these things should have been done by March 2023. We are in August, almost in September. Document internal controls over financial reporting, perform tests of design. These guidelines are provided on the premise that, well, you just started preparation in January 2023. So, but for those people who have long started it and have done it, congratulations. You just be sleeping and taking your coffee, while others will be struggling on what next to do. So remediate the preliminary gap based on test of design, and of course, remediate the preliminary test of operating effectiveness gaps and all of that. The point here is, if you started long enough and you have made mistakes, you have the opportunity of correcting those mistakes before it becomes time for you to submit to the SEC. All of these are what you have here. I mean, I'll just leave jump on this and say by 31st of December 2023, say you are supposed to perform preliminary evaluation by the external auditor, perform further remediation on feedback from auditors, and perform or revalidate the test of design, including the new FSLI, operating effectiveness, and certification. These are the expectations of the SEC, and we believe that working with your auditors, you are able to provide this information, and you are able to provide what it takes to achieve our joint goal for all of the intentions in terms of meeting expectations by the SEC. So on this note, I want to end, and I want to thank Dr. Oduare and the team at Deloitte for the opportunity to come and give my true sense as to the implementation of the internal control over financial reporting as per section 60 to 63 of the ISA. Thank you very much.
Thank you very much. Thank you very much, Dr. Agama, for that, for just clarifying the expectations and providing us, with some of these timelines and the roadmap, just to clarify what needs to be done. Now, there are some questions that had actually been shared for you before the events or the webinar today. I know you mentioned that you may need to leave a bit early. The question I have is whether you'll be able to join the panel session later today, where those questions will be taken, or if I can sort of just talk through them now.
Sure, I'll be here. I still have up to 40 minutes more before.
Okay, perfect. Okay, perfect. So we can take them then. Thank you very much again for your time. This was an amazing one. Thank you. Okay, so we'll then move on to the next speakers who I had introduced earlier. That would be Femi and Dayo from Nigerian Breweries. Thank you for holding on. I know we had tried to start earlier.
Yes, thank you, Sharon. Are you sharing a slide from there? Or are we going to share from here?
If you can, I would suggest you share from your end. Mm. Okay, I'm not sure if your video is on, but we can't see you.
I'll put it on just a second. I guess you can see my screen, right? It's just my video.
We can see your screen. We can see your screen. So if it's difficult getting the video on, I think we can just go ahead. What I would suggest though is that you put it on presentation mode so that all we see is the screen as opposed to.
Good. That is done now.
Okay, I'm sure it's coming up here. Perfect. I think, okay, if you go to the top of the screen, because what we can see is the two slides, right? Which we did have the same issue with Oduari earlier. So if you go to display settings at the top of the screen.
Yeah.
Okay.
Yes, I should do full screen. Bear with us. So we'll seek for help here. Just give us a second.
Hi, Femi, are you there? Oh, Femi, we have the slides here, so I think maybe we should also just
Maybe you can share from there.
yes, but what we have is the PDF. Yeah. So
What?
No, this one.
okay, so we're going to share it from here, Femi, to come up. Oh, okay, no
No.
problem.
It's better now, right?
Yes, it is. It's a lot better now. Thank you.
Is my video still on?
No, your video is off for now.
How about now?
No, it's still off. But I think, we can just go ahead. Okay, the presentation is gone off now. So I think maybe if you're able to get it back up, we can just go ahead without the video.
That's all.
Your video is on now. It's just the slides that we're waiting to come up.
All of this, guys. Come on. Let's go. We should do it for you.
Okay, it's back
Yeah.
up now. Oh, okay.
It's off again. Yeah,
Yeah,
because
yeah,
it's
yeah.
not. Yes.
Okay, perfect.
It's fine now. Good.
Yes, it is. Okay, thank you. So I think we can go
Sincere
ahead.
apologies.
No, not at all. We understand.
Yeah, we are not so used to Zoom. We work more with Teams.
Oh, okay.
That's okay. But that's not this case. We should be familiar with a lot of this technologies. Yeah. So good morning, everyone. Good afternoon. So we are from Nigerian Bureaus. My name is Femi, as earlier introduced, and the Dio is here with me. So we'll be taking you through what we do, our journey so far on the implementation of ICFR in Nigerian Bureaus. So we'll be talking through this agenda content. So we'll take you through how we perform our assessments, the cycle. Then we also talk about some of the challenges that we face, how we overcome them. Then we'll also give some tips at the end of the day. So I will take some slides, then I'll hand over to Dario, my colleague, who will also help take us through. We know we have 15 minutes, so we utilize it effectively. Okay, so just to the background, we have adopted, we are okay, because we are a company, a subsidiary of Heineken, which is a multinational company. So we are early adopter to internal control over financial reporting. Prior to this, we have had our controls, that are not necessarily ICFR related. We have had our key controls. We came up with a framework for our key controls, where we have all the controls that are related to our operations, both financials and non-financials. We document them and we monitor them. But along the line, about 9 years ago, so we came up with specific controls that are related to the financial reporting. And we call them ICFR controls. So we fine-tune the matrix. So we have a matrix that where we keep these controls. And it's being managed by the global team. So we in the local, of course, are expected to adapt these controls where there are some peculiarities in the opcos. So we are expected to do some adaptations. We're also expected to consider where there is a little bit of law that we need to align with. So we do this all this local alignment. And we were expected to monitor these controls. Ideally, our controls are to identify, controls are actually to resolve some risk that we might have identified during our risk assessment, or some risk that we anticipated because of our operating environment. Either they have crystallized before or not, but because of the way we operate, if there are some risks that are strong, then we need to anticipate them and ensure that we have the right controls. We also look at the GL balances to identify the risk that we scope for testing and for assessment. So the slide here is actually the slide that shows how we, how we actually assess these controls in the bureau, in Nigerian bureaus. So like I said, the first stage is our risk assessment and scoping. So we carry out risk assessment, so it's cool. On annual basis, we actually carry out 2 enterprise risk assessments, and we monitor this risk on a periodic basis, quarterly. We report on them. Then we also we carry out audits, that's internal audits. We carry out process reviews. So there are some things that are already identified. There are some risks that are already identified that we need to monitor, to be sure that. So we put some controls to mitigate some of our risk, and we need to monitor these controls to be sure that the controls are actually effective or otherwise. So we use risk assessment to scope our controls. Then we also look at the GL balances, the ones that are material, and there are some controls that the content, the balances may not be too material, but we also, because of the risk nature of the GL, we also scope them. So our controls can be detective, they can also be preventive. So we also consider all this in the scoping of the controls that we want to monitor for the year. This exercise is done on a yearly basis. So in Q1, we carry out our scoping. We identify the controls that we want to monitor. We also link them to the risk that we are trying to mitigate. And we get approval for this, aligning with our global internal audit and internal control, and also aligning with our external auditor, Deloitte, this time around. In Q2 of the year, we carry out what we call self-assessment, business self-assessment. What BSA does is actually to help us drive the acceptance of the risk, even in the business. So what we do, business assessment, self-assessment, is to ask the business, the owner of the operators, the performance of these controls, to assess the control by themselves. So we use this to ensure that everybody owns this control, everybody understands the control, and it also helps us in self-disclosure. So everybody, the control performance, we assess these controls that we are scoped, and they will give their results. They will rank them effective or ineffective. They will provide evidence that the controls are effective or ineffective. So what I did not mention before was that in our metrics, we already call out what our controls are, what are the risks they are mitigating, and how those controls should be performed. So we've already called those things out in our metrics. So we expect the control owners, the control performers to check these controls and assess them based on how we have documented them, that they should be performed, and they provide evidence. This is done in Q2. Then in Q3 and towards the end of that Q2, the P&CI will carry out what we call control evaluation. So what control evaluation does is we do an independent check looking at we test this design, then we test the performance of those controls. So this we do to ensure that to give credibility, to the controls we are testing, and to be sure, we are independent, regardless of what the business has disclosed. We carry out our independence check, we check what they have done, and we come out with our reports. So that which is the last stage. So we come up with a report. Then our report could mean controls are deficient, or they are not effective, or things need to be done, or it's not meeting the expected, the expected risk that we want to mitigate. Then we'll come up with our report. Then we can come up with further controls or actions that need to be done to ensure that the controls become effective and to be sure that our objectives are met. So we come up with this, and we report them, to the management and also to the people that are saddled with the governance, the audit committee, the risk committee. These are the guys that we give this report to. So I'll quickly go to the next slide. So the next slide is just talking specifically on the self-assessment, which I've spoken about. So the reason why we do self-assessment is to create awareness in the business, so that people are aware. Then the ownership of the risk and control, to let people know that the risk and controls are not only for the P&CI, process and control improvements of the organization, but rather that everyone should own it, and they should, just to drive the acceptance. Then also for transparency, and it also helps us in early detection. So early enough, we can detect issues. Before we started, when we started early, it was people self-assessment was not effective, but I can tell you now, people are disclosing correctly. People are giving, issues are identified that P&CI and the business can quickly resolve at the right time, before it's boomerang, before it is delayed. So on this, the implementation of ICFR by SEC, the requirements. So this is what we have done so far. So we have reviewed the guidance, and we looked at what we are doing, and we look at the what SEC released on how we should follow, what we should do. We came up with gap analysis together with Deloitte. Okay, so there are some things that might not be. We had few gaps which are not too significant. So we came up with this. We mapped all our GLs, to all our controls to our GLs. We ensure that the risk that we say we are covering is actually well mitigated in the controls we selected. So we came up with this, and we aligned with Deloitte, and we have closed all the identified gaps, and we are ready to go. This year, we have carried out business self-assessment. We are ongoing with the testing of the P&CI. By year end, we'll do what we call the roll forward and the year end review of controls, especially for the controls that we performed at the end of the year. So we do all those things in December and January. So that is the cycle of how we perform, and that is exactly what we still want to continue. I want over to my colleague now, who will quickly through the other slides.
So thank you, Femi. If you look at our experience so far, this process has helped us develop a control-conscious work culture. And I think Femi has explained that that's one of the benefits of the DSA. But it also helps us to standardize policies and procedures, especially for us that we work. Heineken is in like 190 countries, so we're able to do that. But we are also able to ensure compliance with applicable local legislation. So we're able to reduce compliance risks. Ultimately, the stakeholders, the shareholders must be able to use our financial information. So it helps to improve the reliability of this. And also ensures that records are accurately presented in the financial statement. But we should not forget, and I think the earlier speakers mentioned this, for any new adopter, it actually serves as an early warning system, because by the time you go through the process of scoping, through risk assessments, and you also go through the process of the continuous monitoring of these controls, you have a system that will help you prevent and detect fraud and other such activities as well. But while you're going to implement, remember that there are some common misconceptions. One, ICFR is not only for auditors or the internal control system. You should never fall into the trap of assuming that your internal control system is robust. The continuous periodic risk assessments and that you do would always tell you whether there are gaps, and it's not something that you just do once and for all. ICFR is not a fault-finding exercise as well, and it's not a check on it's not the external auditors checking the internal control, because ideally, if you look at what it should be, it is really there should be business ownership, and our colleagues from SEC and Deloitte have already mentioned that, because it's really the responsibility of management, and its effectiveness must be certified by the CEO and CFO. The recommended framework is COSO, so that is a comprehensive approach. We've been told that it's not the only framework, but it is a comprehensive approach, and that's what we use. It would strengthen the entity's control environment, and you know that ultimately the auditors will be reviewing the design, implementation, and operating effectiveness of your internal control, not the internal control unit itself. So some good practices that I would like to, so first, adopt and stick to a structured approach for your planning, updating, improving, and monitoring, and also reporting on ICFR. You also need to have a way that you integrate your ICFR to the overall governance and operations of the business. We have done that with the BSA and the way we've communicated the process to the larger business. You need to choose how you integrate that into your overall governance and operating system. And we go ahead and also we report on the effectiveness of ICFR. You need to choose a review or monetary cycle that works for your entity. We've shared what works for us. It might not necessarily work for you. Please pay attention to the details. In the process of scoping, there always the tendency to go for maybe materially significant GLs and balances. Do still pay attention to the details. Small accounts might matter. They might reveal some other deficiencies as well. So what is monitored gets managed. So you need to have a system, a structure, a framework of control monitoring. And of course, you need to communicate. You can never over-communicate, because ICFR thrives where the roles and responsibilities are well defined and communicated. And you need to always I think you need to adopt, there are systems actually available where you can have your document and storing evidence made easy and automated. So we use ServiceNow, but I'm sure there are like so many such systems that are available. So Femi has really spoken to it, so I'm not really going to talk about this. This is just a sample of our risk and control metrics for just 1 or 2 sample controls. I believe we try to do well on time, so that is our presentation.
Thank you very much. Thank you very much to the Nigerian Breweries team for the presentation and just talking us through some of the practicalities of adopting this. It's good to hear from, you know, a team of people that have gone through this in the past. So yeah, so that's maybe, it makes it a bit more relatable, let's put it that way. So thank you for that, yes, and you did do well on time. Now, what we're going to do is move into a panel session. It was meant to be for 35 minutes, but we're trying to just manage a bit of time now so that we don't keep you past the 2 hours that we had scheduled for this. We have 6 panelists that are going to be joining us, and most of who you've met already. So we're just going to share the slides. Yes, most of who you've met already. I think the only person, well, there are 2 people who hadn't been previously introduced. That's Michael Oshinloye, who is a partner in our financial services audit and assurance unit. And then we have Mr. Adeshola Amo, who is from the FRCN. What I'm going to do now is just talk through his profile to introduce him. So Mr. Adeshola Amo is a fellow of the Institute of Chartered Accountants of Nigeria and a certified member of the Association of Certified Fraud Examiners, amongst others. He's an associate member of the Institute of Chartered Secretaries and Administrators of Nigeria. He joined the Service of the Financial Reporting Council of Nigeria in 2006 under the defunct Nigerian Accounting Standards Board, NASB, as a senior manager and has risen through the ranks to become deputy director. He has work experience in both money and capital markets and financial reporting, which span over 27 years, 17 of which have been spent in accounting standard setting, investigative financial analysis, and regulatory compliance monitoring at the NASB, at the then NASB, now Financial Reporting Council of Nigeria. He has served the council for 17 years and currently heads the Directorate of Auditing Practice Standards. So welcome to our panelists.
Thank you very much.
Thank you, Sean.
Good morning.
Okay, thank you. I think for now, if possible, we could turn our videos on. But while we do that, so how this is going to work is, while registering, a number of questions had been submitted for, you know, answering here. So what I've done is try to analyze that. What we've done is analyze that, and we're just going to go through some of those now. Now, during the presentation today, a number of them have actually been answered. So we may not spend too much time on those. What we'll just do is just try to do a quick recap or summary just to make sure that, you know, everyone is clear on what the response is. I think we have Dr. Agama and the Nigerian Breweries team also to join us in the panel. Okay, so thank you very much. So I'll start with the questions for Dr. Agama. Now, as I mentioned, some of these have been responded to, but it's just to provide clarification. So a quick summary. The first question that we have here is it mandatory for all entities to have evaluated the effectiveness of its ICFR by the end of August 2023?
Well, the simple answer is that they're expected to do that within 90 days. And it's actually dependent on, you know, the. So if your accounting year ends in December, you know that, you know, but you back step to be able to calculate when that has to be done. If it is in March 2024, you also back step to know, you know, how that is, you know, going to be done. And of course, you have the auditors who are there to be able to provide guidance, you know, as the case may be. And you already know the reporting templates for the SEC as a public company. So except you have not been doing that, right? So, but if you need guidance, we're always available, but within that 90 days prescribed.
Within the 90 days, at least the sort of first set of tests of effectiveness should have been done. Okay, thank you. Another question here is what necessitated SEC to come up with this requirement? Is there a perceived notion that there is an issue with the internal control over financial reporting in Nigeria?
It's not a perceived notion. It's like asking if people do sin. Yes, people do sin, irrespective of the fact that you have salvation. So the question is, defend yourself. Do what you need to do and show yourself that you do not belong to all of the pack, you know. And I repeat again, you know, I'm sorry I become so religious, but it is a fact that the heart of man is desperately wicked. Who can know it all? So you are assumed to be a bad person until you change. So clearly, do and show that you are not the bad person. The onus is on you to show that you have adequate control, to show that your framework is perfect, to show that your directors, management, everybody is in line, that we're all following the principles that have been laid down. So responsibility is actually yours to prove.
Okay. Okay, thank you very much. Thank you. I think it's also just important to note, I think it's part of the, should I say, global best practices even to implement ICFR in your financial reporting. Okay, so the next question or set of questions I'm going to ask are for our Nigerian Bureau's representatives. So either Femi or Dayo can respond to this. But the first one is, asking, can delaying remediation of deficiencies today turn into significant deficiencies in the future? Okay, so, you're muted, so we can't hear you.
Okay, this is Dayo. Yes, they can, because really small issues will grow. And if you look at it in terms of context, there is like what we call like a snowballing effect. If you leave such issues that are unmitigated, they would affect other processes, maybe impact on other systems and other balances over time. And you run the risk of material misstatements, and which is the major risk we're trying to avoid by implementing ICFR in the first place. So
okay.
Yes.
Yeah. Thank you. Now, the second question is asking, how do you select and monitor the right scope and mix of controls?
Yeah, okay, thank you. I think I also tried to cover that in my presentation. So we carry out the risk assessment of our process. This is done on a yearly basis. We assess at the Q1, we assess in Q2. Then we carry out some audit engagement, some process review. So from this, we already scope some controls that needs to be tested. Then we look at the GL balances as well. So there are some GL balances that we must always scope for testing, possibly because of their materiality or possibly because of the volatility nature of the transactions in those GLs. So these are the ways we scope, and we also ensure that our controls are majorly, where it is possible, majorly preventive, and where it is not possible, we select detective controls. So this is how we scope and mix the mix of our controls in Nigeria.
Okay. Thank you very much. Yeah, I think the point on also considering materiality is quite important, just looking at the materiality of your systems and processes in place. Okay, thank you for that. Now we're going to move to our FRC representative, Mr. Adeshola Amo. We have about 3 questions for you. So firstly, how does an entity report on ICFR when it has multiple locations? So if you have your a head office that is not in a location mandated to issue an opinion or a report on ICFR?
Well, thank you very much. Good morning, everyone. Let me first thank the organizers on behalf of my executive secretary. He personally wanted to be part of this program. But as we speak, the council is organizing another program on the island, so he's there. So he's asked me to represent him. So once again, it's an honor to be part of this program. Now, can you hear me?
Yes, very well.
Yes. So in answering the question, I think I'm glad to be part of the program earlier when Nigerian Bureau were part of were part of the exercise. Dr. Agama mentioned that the SEC rule has been up as early as 2007. FRC Act also 2011, but because it's not been fully implemented. So now when an entity that has its location, let's say in America, I mean, the head office in America and the subsidiary is in Nigeria. If the organization, I mean, the company, the law over there in America is not requiring or requesting the organization to do it, but for the fact that the laws, the regulation that guides the operation of that entity, of the subsidiary, where it's situated, that entity must comply with that law. So just as we have it in Nigeria, Nigerian Brewery, they've started as far back as 9 years ago, when we have not started implementing our. So in answering this question, any entity that is located in Nigeria under the coverage of both SEC and FRC need to comply with the requirement of the law concerning the ICFR. If you look at Section 7, subsection 2F of FRC Act, makes it give the council the mandate to require the management assessment of internal control over, including information system control with independent attestation. So I think that's the way to go.
Okay, thank you very much. Another question that has been asked is more around the requirements for PIEs and private companies in line with FRC. So I don't know if you can maybe throw more light on that.
Yes, as you agree with me, the activity of the FRC is PIEs, and if you look at the, I think Section 73 of the Act, even as amended, talks about who and who, which organization fall under the ambit of PIE. Now, SEC covers listed entities, but the activity of FRC goes beyond listed entity, covers both listed and non-listed. But for the fact that SEC has released that document to avoid multiplicity of activities or duplication of activities or documents, so whoever complies with the requirements of SEC as PIE, and so as listed entity, has also complied with the requirement of FRC, the guidelines as far as PIE is concerned. So the one that FRC released, the guidance on management report on internal control over financial reporting covers entity other than listed entities. Every other entity other than listed entity. And when you go into document, the scope is quite clear there. Those that should implement it, if I may just go through it and read it, it says small companies as defined by CAMA. That is CAMA 2020.
Yeah.
It also is scope out. It scope out all these entities. Small company is scope out of it. Unit microfinance as defined by CBN is also scope out of it. Insurance broker, because of their nature, they are small in nature, so not to overburden them with regulation, they are scope out of it. Non-tertiary educational institution also scope out of it. Non-tertiary health institution, any other as may be considered by FRC from time to time. But the regulation gave a caveat. However, any of the excluded entity listed above, as well as non-profit interest entity that desire best practice, are encouraged to implement these guidelines. So that's how the guidelines stay. So it scope out some because of their nature, not to, but if they are interested in best practice, they are encouraged to be part of it.
Okay. That's yeah, that's clear. Thank you very much.
No.
Now, just a final question then. Will the requirements and processes of ICFR be readily available for management? Is it possible to get a specimen of a company's ICFR booklet, or what it should look like? So, form of a template.
Thank you. If you can see what I'm holding, we have a booklet already. We've printed both that of management and the assurance engagement. Now, I think one of the reasons why SEC decided to move the implementation to this year was because the framework that the auditors are going to use for the attestation was not ready.
Yeah.
And because regulators will work hand in hand, we work together. So they gave us that privilege to push it forward, aside from the cries of other users. So now, if you look inside this, we have an appendix that shows the kind of a kind of specimen that is required. However, it shouldn't be made. It shouldn't just copy it and paste it.
Sure.
Yeah, it shouldn't be a boilerplate.
Sure.
It should be
tailored.
it should be tailored to their requirement and to the report or the attestation of the auditors. So we have a copy there in that. And before now, we ought to have put it on our website. We were waiting for the gazetting of our act. It's just been done. We printed it. I can assure you, before the end of today or tomorrow, it will get on our website for anybody that wants to document it. We thought, or we in the stage, that a section that could affect the document may be affected or may be changed or amended when the amendment activity was going on. So that was why we didn't put it on our website. Now that we're ready, the act has been signed, gazetted, nothing affected the document because we completed the document before the Amendment Act is signed. So we're good to go before the end of the week, and I assure you it will be on the website. Okay, perfect. Thank you very much.
Thank you very much for the responses. Okay, so we'll move on to Dr. Oduari now to take some of the questions that have been posed to him. Firstly, will management of the entities require a consultant to perform this assessment annually, or can management use internal resources to perform it? Oh, you're muted, Oduari.
Okay, that will be a decision for management to take based on the size of the organization, the complexity of the operations, and also the account balances, the extent to which judgment is being required in whatever they do. So management will have to decide. There is no rule that says you should engage consultant or not engage consultant, and also based on your business model. So we have three models that organizations do use. They could either outsource completely the entire internal control review to a consultant, while their chief internal auditor will now take the report and present to management, or they could do co-sourcing. It might be 50-50. They engage consultant to provide some resource, while they to provide other resources, so they learn in the process. Or the organization can just do it 100% wholesome. But we have some organizations who do it in phases. At the initial stage, you engage consultants. After engaging consultant, you move to the second where you do it 50-50, maybe in another year, maybe in the third year, do it alone, wrong with it.
Okay, thank you very much for that. And the final question for you is, what are the differences between direct and indirect controls? Okay,
good. The indirect control, the COSO framework itself sits in the context of indirect control. The direct controls happen to be controls that sit directly on the account balances. That is, you can link on these controls to individual account balances, debtors, creditors, treasury, bank and cash, PPE. So controls that sit in those are direct. But for indirect controls, there are controls that support the direct controls. You see, they are the controls that just have to operate within the environment. So that's why you have controls around control environment, risk assessment, information and communication monitoring. All those are called indirect control because you can't link them directly to any account balance, but they strengthen the whatever happens around the direct controls. So you must have both running in an organization. You can't take one and leave the other.
Okay, thank you very much. Thank you very much for your time, Dr. Oduari. Okay, so I just want to address the fact that, yeah, it's 11:57 now, which is 3 minutes to when the webinar is meant to end, or 2 minutes now. So we just want to crave your indulgence for another maybe 15 minutes just to allow us conclude. There are still a few questions that we want to take. After that, there's essentially a final poll just to assess, the level of understanding as at this stage and what else we can do to support you all as you go through this journey, before we then take closing remarks. So apologies, I know we're meant to end at 12, but if you can just give us maybe about 15 minutes till about 12:15 to conclude. Okay, so we have 2 questions that we want to respond to from the question and answer poll. I think most of them have been responded to by some of the organizers, but I'll take one, and then there's one to the NB team. So firstly, wouldn't it be a self-review threat for an external auditor to be involved in carrying out an ICFR audit for an organization and also be involved in the annual audit of the same organization? So essentially the response to this is no, there wouldn't be a self-review threat. Just like in financial reporting and with the financial statements, the company or the organization is the one that is preparing the documentation, that is going through this process of the self-assessment of the controls in place. Our own job is to review this, and I think Dr. Agama made it clear in his presentation that the auditors are to review it and then issue a report on the existence, adequacy, and effectiveness of the internal controls. Now, some of these internal controls, on the internal control systems, some of these controls can be relied on, or we will be relying on, for the purpose of the audit of the financial statements, depending on the risk assessment that has been done. But our work is not necessarily to prepare the controls, it's more to review and then provide a report on it, just as we do for the financial statements. So the company prepares the financial statements and we come in to perform that audit. So I hope that clarifies. Now, the second one is to the NB team. Is to the NB team. So I don't know if Femi or Dayo will be taking this. But the question that has been asked is, using the BPOs to perform internal control assessments, was the result really objective? Because using an external assessor may have provided an objective result of the control system. Okay.
Yeah. Okay, so Dayo, please give it a shot.
Okay. You should understand that in our own context, it was a journey. You understand, and that's why Femi mentioned earlier that at the beginning, the quality of the self-assessment was not at the standard we wanted, because we needed them to grow in that maturity, that control maturity, as well as achieve ownership. But over time, we've seen that their self-declaration has been very close to our testing, because they now understand the merits of that ownership and the benefits of that ownership. So that's what I would advise any adopter, because if ICFR is viewed as just owned by maybe the directors and the internal audit system, then you are not going to really gain the benefit of it. Because one of the major benefits is that ability to prevent misstatements. That's the approach I would take to answering that question.
Maybe in addition to that, we don't solely rely on outcome of the business self-assessment, even though we use it to test the maturity of the system. We also carry out an independent test by internal audit or internal control department, process and control improvement team. So we carry out independent check, independent review, even of what the business did. It will also carry out our own independent without looking at what they have done. Exactly. So we carry out our own. So that is what we do here, and I would think it is effective and is working for us.
Thank you very much. Thank you. Okay, so we do have some questions for Michael Oshinloye, which is more targeted at understanding the requirements from an external audit point of view. So I'm going to take the questions now, Michael. Firstly, can the external auditor report a material weakness in ICFR and still issue a clean audit opinion on the audit of the financial statements, assuming that the supposed impact of the material weakness has been corrected with the use of post-period journals or audit journals?
Okay, thank you very much, Sheung. That's an important and a very crucial question. I will say it is depending on the outcome of the auditor's evaluation of the impact of the observed materiality on the overall scope and audit evidence that the auditors has obtained and they have gathered. You know, audit is all about, gathering evidence, okay? So as an auditor, if I observe material weakness and I was able to, evaluate what the impact of that material weakness is in terms of, okay, we're able to, quantify, the misstatement that has been resulted as a result, and that misstatement, has been corrected. Okay, so I will say yes, we can still have a clean audit report on the financial statements, regardless of whether we have material weakness. So it then means that, the attestation report, on ICFR, we have that material weakness, disclosed.
Okay, thank you very much, Michael. The next one, what would the external auditor require for them to attest on the compliance with ICFR?
Okay, I think on the back of this last question that I just had, audit is about gathering evidence. Okay, so the guidelines require that management themselves, should do the test. Okay, so and the management, is also expected to issue their report. Okay, so what I will be looking out for as external auditor is, look, tell me what you have done, to arrive at your own conclusion. Okay, you are expected to put a framework in place. Have you put a framework in place? Yes. Okay, you are expected to do risk assessment. Show me, how have you done your risk assessment? Okay, how have you, identified the material account balances that you have? How have you determined your materiality? How have you tested your evaluation? How have you evaluated your design and implementation? And all that. How, I want to look at those journeys, how you get to your answer. How you have tested the operating effectiveness. What are the evidential matter that you look at, to arrive at your conclusion? So you need to take me through your journey from when you started to when you reported, so that I, as an independent person, can follow through on that journey, and I should be able to arrive at your answer. So that's what I'll be looking for as an auditor. Show me, how did you arrive at your conclusion? What are the processes you have put in place? How have you tested it? What are the evidence that you have gathered? And all that. Simple as that.
Okay, thank you very, very much. I want to read out this question, but I'm hoping through the presentations today that has become a bit clearer. But how is this different from the procedures performed by auditors during the financial statement audit? The auditors will typically test these controls, even when sometimes they choose not to rely on the controls.
Okay, I will say what ICFR has introduced, this service what we do in the past. Okay, before, management were not supposed to, issue any attestation reports or any certification report on their internal control, but now they have to do it. They were not supposed to be testing operating effectiveness or testing design and implementation, or ensure that their internal control process over financial reporting is in line with a particular framework and all that. So that has been introduced now as a result of, implementation of Section 60 to Section 63 of Investment and Security Act. So those are new nuances that has been introduced. Then the auditor, in the other hand, is expected to also issue an attestation report. And for you to be able to do that, you have to go above and beyond what you used to do before. Okay, because now you are expected to issue 2 opinions one on the financial statement and one on the internal control. Okay, so it is more than what auditors used to do in the past, because now, regardless of whether you are relying on those control or not, you have to test them, for the purpose of ICFR attestation that you're expected to issue as external auditor.
Okay. Thank you. Thank you very much. One final question. Sorry, I'm just looking at time for what we have to do, but one final question, which would be, would the external auditor flag a material weakness in ICFR despite the impact of the weakness being identified by management and corrected by post-TV journals?
Yeah, regardless of whether the misstatement that arose as a result of the material weakness has been corrected or not, you are expected, to disclose the material weakness that has been observed, even if it is only one material weakness. If you observe any material weakness, even management themselves, they are supposed to identify this material weakness, report it to audit committee, disclose this material weakness to the auditor. Then auditor will also have to, validate and say, okay, you have only one material weakness which you have disclosed to us, and that has to be, in their own report, and the auditor as well has to, disclose this in their report, and what the management is doing to remediate this material weakness. I think that is also very important. Fine, we have a material weakness, we've identified it, and we've corrected the misstatement that arose as a result. And these are steps that management is also taking to remediate, the material weakness. All that has to be, included in management report, and as well as in auditor's attestation report.
Okay, thank you very much. Thanks, Michael. And thanks to all the panelists for responding to the questions that have been asked. I believe at this point, pretty much every question has been responded to, both those that came in through the registration process, as well as those that have been asked here. I mean, this is a continuous process. We remain here to continue to support our clients with any questions that you have. Feel free to reach out to your managers, your partners, if you do have any further questions, need any further clarification. As I mentioned, we will also be sharing a toolkit after this, considering everything that has been presented here today, as well as some questions that may come up, just trying to provide that further clarification. So you should look out for that. But again, we're very reachable if you need any questions. So at this point, we just want to run a final poll just to get a sense of where everyone is at this point. So you should see within the next few seconds a poll that would come up. Yeah. And if we could maybe just use 2 minutes to complete this. It's 3 questions that we have, just so we have a better understanding of, the impact that this webinar has made. So about 1.5 minutes to 2 minutes, we're just going to share the results. Okay, so thanks for that. So now we're just going to share the results that we have so far. Okay, so thank you very much. We got definitely a higher level of participation with this. So the first question, following the discussion, a scale of 1 to 5, please state your level of understanding. We see here that most people are in the 4 region, which shows that there is, you know, a good understanding, but still some way to get to a better understanding or full understanding. I mean, as I mentioned, we continue to be here to support. This is going to be an ongoing process pretty much from now till when the reports are issued by 31st March next year. So, you know, we'll continue to engage. Feel free to reach out to us as you need to. Then secondly, do you now understand your responsibility as management for the ICFR implementation? I mean, it's great news to hear that we're now at 100%. So we can say, you know, we have communicated using this webinar. And then finally, do you now understand the role of the external auditor for the ICFR implementation? Again, we have 100%. So thank you very much for that. Now, I know I promised 12:15, so I won't waste much more time. I'm going to invite Hassan Lawal, who is our Africa Audit Quality and Risk Leader, to give the closing remarks. Hassan, you're muted.
Right.
Yeah.
Thank you, Sharon. Thank you, everyone. Firstly, I would like to thank everyone on behalf of the firm for the success of this event. It has indeed been a time well spent. Many thanks to our presenters and the panelists. Our appreciation also goes to all the participants on this call today. Your attendance and active participation is really appreciated. The poll at the start of the session indicated a good level of readiness, I would say. And our joy will be that this session achieves its primary objective, which is to create awareness on ICFR and support our clients' readiness in implementing the ICFR. So just to take us through some points that were made during the call. During the session, Dr. Oduare took us through the journey leading to the development of the framework for implementing Section 60 to 63 of the Investment and Security Act. He also made a deep dive into the COSO framework and its principles. It was indeed a very detailed and thoughtful session. So I also want to thank Dr. Agama from SEC for the session he presented, in which he made, you know, what is seen like abstract side of ICFR. He made it relatable for all the attendees, pointing out that the cross is actually that of the public companies whose shares are transferable and fall under the jurisdiction of SEC. Dr. Agama also pointed out the importance of having full business understanding by management and the board of directors, and that their meetings and all that their involvement and oversights should make the right impact about adding to the assurance that is required by investors. He also highlighted suggestive internal control frameworks, even though COSO is seen as one, there are other acceptable framework. So I think that session was also very helpful in delivering the objective of this session. So I would also like to thank the team from Nigerian bureaus. Dayo and Femi, thank you so much. They took us through a detailed overview of ICFR monitoring cycle, sharing their experience in Nigerian bureaus. And the session was quite more like an awesome masterclass on control implementation. So I actually like the point that was made on how it has helped Nigerian bureaus standardize their policies and procedures, and also the pitfalls and misconceptions which they outlined. So you also agree with me that the panel session was very insightful. We also like to thank all the panelists who provided insightful answers to the questions that were made. So not to take more of our time, a big thanks to you, my team, my colleagues, Michael, Sean, everyone. Thank you for the coordination and everything here. I hope that we are all better informed and equipped with helpful knowledge. So we, your partners at Deloitte, look forward to collaborative integrated audits and adoption of the framework. I also not want to forget our Mr. Dishola Amo from ICFR. Thank you so much for your insightful the perspective that you brought in from FRC. So this presented us a good opportunity to learn and share knowledge, and we look forward to more of this session. So thank you so much, everyone, once again, and thanks, Sheol.
Thank you very much. Thank you very much, Hassan. So before we end, I see that there are some questions about the slides. What we are going to do is the slides that we can share, we will share. Otherwise, we're just going to make sure that the main points of discussion are covered in the toolkits that we are sent. So for any slides that we can't share, for instance, we'll just take out the main areas for discussion and share that with you. So yeah, thank you very much, everyone, for staying, and for we apologize again for going past the time that was scheduled. We hope you found this very engaging, insightful, educational, and we continue to be here to be able to support you through your controls journey. So thank you very much and enjoy the rest of the day. Thanks. Bye.
On the 23rd of April, 1845, William Welch Deloitte made the first entry into his time ledger. With a stroke of a pen, he set off a series of connections that has grown into a global organisation of over 330,000 of us. Today, more than 175 years later, we've chosen our Founders' Day as a day to consider what has made us, what continues to make us, thrive. After one of our most challenging years, and one of individual perseverance and collective success, we encourage you to take a moment to reflect on our enduring values together and look around at who we are, at what we aspire to be. As we take this moment to say thank you.
谢谢.
Grazie.
Thank you.
Thank you, Deloitte.
For all that you've done this year, for our past, present, and future.